first, something a little different. We're joined by property expert, mortgage broker Tayo Oguntonade, and we're asking if now is the right time to fix your mortgage. Tayo, we're going to be questioning you about everything to do with mortgages in a moment. So if you need some advice, if you're thinking about remortgaging, if you're thinking about buying, if you're thinking about what kind of mortgage you should be on, should you change, should you fix, should you be on a tracker, then give us a call now. 0207 862 2222 is the number that you need. Angela, this must be on your radar at the moment. Your kids are looking for mortgages. So
my older two are young marrieds, renting, hoping to, but trying to look into buying. And I think it's just astonishing that it is so utterly difficult. You know, thank goodness both couples are in good jobs. They're working hard. They've saved for as much of a deposit as they can. But it just seems that the whole process is so unattainable. It's so difficult. And I mean, one thing that I'm interested in is that, I mean, obviously we're talking about mortgages in particular, but are there any sort of types of property that are more mortgage friendly than others? Not obviously just on price, but is there, how can they put themselves in a better position?
Yeah, so I think speaking about properties that are more mortgage friendly, typically older build properties, more lenders are willing to lend on them, and more lenders are willing to lend on houses than flats effectively, because there's less less things that, remember with a flat, typically most of them are leasehold, so depending on the leaseholder, how much is left on the lease, that can sometimes make lenders tweak their lending decisions. So typically older build houses of standard construction, brick walls rather than concrete and so on and so forth, you'll find that most lenders are willing to lend on those. But you're absolutely right, it's really, really difficult for young people at the moment. Yeah. And those are couples as well.
Yeah,
and they don't really look at it case by case, it felt. In my experience, I'm 41 now, and we bought our property 3 years ago, but it was so hard to get a mortgage as someone who was freelance or self-employed. So even though I'd been paying rent for 20 years in London, never missing a rent payment, they were looking at me going, yeah, but what happens if your contract with Heart finishes? And I'm going, well, hopefully it won't. Like, hopefully I'm safe to give it. We had to jump through so many hoops to get it. And obviously at that, and then once they go, yeah, then there's the deposit to deal with. We're, again, like Angela, you know, we're both working, but the 20% deposit?
Yeah, absolutely. And to a question like that, I think that anybody in that situation where you're self-employed, there's something specific about your mortgage application, in my opinion, always go to a broker, because an experienced broker who's been doing it for 20 years or so, they know that, all right, cool, someone who is a successful broadcaster, they go with this lender.
Say that. Slipped him a 20 earlier on.
They'll go with this lender because I've put someone through 10 years ago and that lender was cool with it. I'll give them a call. I'll speak to the BDM and see if that works still. Okay. And they will know what lender to go with, which is really, really important.
So, Tayo, let's talk about what's going to be happening now. I think everyone's a little bit confused because, of course, we had the Liz Truss mini budget, which saw everyone's mortgage skyrocket. Then we saw the market calm down again, but then inflation went up, which and the Bank of England put up the rates, so everything went up. It seems to be going up and down and up and down. Where are we right now, in the up or the down?
A really, really interesting question. So we're down relatively. Okay. Relative to last summer, right? Average mortgage rates right now are around 5.6, whereas last year, summertime, they were around 6.8 or something like that. Right. But we're up significantly from 2-3 years ago. I mean, in 2021, the average rates were about 2.4% or something.
Which is when we got our mortgage.
Which is when we got ours. Yeah. Now that's expired and we're on to today's rates, which is crazy. But so we're relatively down, but it's still high in comparison to the last 10 years. And I think that people are just using that time to kind of decide whether they should fix or not, which is where that question comes from.
OK, so right now we're seeing some rates go up just a tiny bit. Yeah. We don't know whether that is going to come back down. So let's say you're watching at home right now and your mortgage is coming up for renewal and you're thinking, what should I do? Do I fix at these slightly higher rates? I guess the big question is, are we ever going to see those mortgage rates that we had pre-Liz Truss, those 2% mortgages, are they ever going to come back again?
I don't think so in the near future.
Right.
We need to
and when you say near future, because we've just told people here who are in their 20s in the studio that they're going to have to wait until they're 65 to pay their mortgages off. What's kind of near future in your terms?
Typically, I say near future because there's 2-year fixed mortgages available. So I think that if you're looking to fix for 2 years, don't run away from fixing for 2 years now because you think that it's going to drop down to 2% in the next 2 years.
So the next 2-3 years, that ain't going to happen.
That's not going to happen. This is the new normal.
So this is the new normal. So what should you be doing now? You're thinking of remortgaging. Should you fix at the rate that is now? Should you go tracker? Should you fix for a longer term, perhaps, because you're worried that mortgage rates might actually go the different way and start rising even more?
A really, really interesting question, one that many people have. I think you have to go to the whole saying of bird in hand versus bird in the tree, right? With fixing right now, I think planning ahead is really, really important. So you can actually start looking for mortgage rates 6 months before your deal actually runs out. That allows you to look at rates today and look at rates in 6 months' time and compare the two. So you could get a mortgage offer today, but you're not obliged to take it out. And then in 6 months' time, if rates are higher, you go with your previous one. If rates are lower, you can apply again and get a lower
So this is really important because I think a lot of people miss this out, that you can look at mortgage rates today for 6 months' time, sign the deal, but don't switch your mortgage until 6 months. In 6 months, whatever's changed, they have to give you the deal that you've already signed.
Yes, still obliged.
So they still obliged to give you that, but you can actually ditch that and go for something cheaper.
Exactly
how long will
that.
last, or how long can you ice it for?
The mortgage offers normally last 6 months. So that's why we say plan ahead, because if your deal expired in February, so 6 months from now is August. If your deal expired in August, you'd look today, search around, get a mortgage offer at today's rates, and then you can wait until August. If rates are better in August, you then search and get a better deal in August, and you can ditch the one that you took in February.
That's great to hear, isn't it?
That's 6 months, though. Is that entirely inflexible? It never goes any longer than that?
It's a mortgage offer. They're bound to give it to you.
Right.
Some of the mortgage lenders have dropped their interest rate. So now you're looking at it. Some of them are down to sort of 3.9, around that.
Some of them dipped under 4%. I think they're creeping up over again.
Ahead of his budget, Jeremy's budget, in a couple of weeks' time. So surely that's a good sign.
It is a good sign, but it's one of those things where it's really, really difficult to where they're going to take it. And I think that if you're actually waiting to see if rates change, it's a little bit of a gamble. I think whilst we're paying attention to the wider economy, I think people also need to pay attention to their personal financial circumstances. Is the mortgage rates affordable for you today?
Yeah.
If it gets a little bit cheaper, it might be nice. But if it gets a bit more expensive, does that throw you completely out of whack? If so, then maybe think about fixing today, basically, because you know it's affordable today.
OK, Katie has emailed in to ask, is there any benefit from trying to pay off your mortgage weekly rather than monthly?
So that depends specifically on when interest is charged on the mortgage, effectively.
Right.
So some mortgage lenders will charge interest annually, some will charge it monthly. I think that rather than looking at that, one thing that's even better to do, in my personal opinion, is that if you do have extra funds available, no matter how small it is, try to make overpayments on a monthly basis, because when you make overpayments, it goes off the capital and no interest is paid on that effectively.
That's a really, really good point, because, again, I was trying to get my head around this when we remortgaged. And I asked the question to the mortgage broker. I said, at the end of this 5-year term, how much of the actual debt will we have paid off? And he wasn't able to give me an answer because it turns out that your mortgages, you're paying off different bits of the debt at different times. So
I did not know that.
In the very beginning of your term, you're actually paying a lot more interest rather than debt. And so you can't say, well, after 5 years, the debt that will remain is X amount, and then I can sort of plan ahead. This, to me, Tayo, sounds insane.
Yeah, it's crazy. There's actually like a little chart. So what you said is exactly right. At the beginning, you're paying mostly interest. And as you get into the middle of the term, you'll find that it's kind of like half and half. And then coming to the end, you're mostly paying off the capital. And that's why at the beginning in particular, if you can make overpayments, even if it's only £100, let's say your whole mortgage is £1,000, right? Your mortgage payment, in some cases, that might be maybe £600 interest and £400 capital. If you pay that extra £100, that comes off the capital solely. Nothing goes to the bank.
That is a great piece of advice.
Could I ask a question? There will be lots of people watching today who've got kids that are trying to get onto their property ladder for the first time. Now, there's lots of chatter online about Jeremy Hunt coming out and saying, you know, these 1% deposit, 99% mortgages. What do you think about those? Good or bad?
So with these government schemes, I think that we do have to be very careful with them because they're available to the whole of the UK. And I think that's one bit that we need to really focus on here. So effectively, what's going to happen is that they're thinking about allowing people to be able to obtain 99% mortgages.
So that would mean that you just need to put a 1% deposit, basically.
Absolutely. So buying for 300k, you put down 3k.
£3,000.
Yeah.
I think there's a small amount of people that this may benefit, and who I think that is similar to the example you mentioned previously. 2 people that are working and that are renting, and the rent is eating up a lot of their money, basically. And as a result of that, they're struggling to save, and they're able to put that down. But the next thing is that they're also definitely able to make the mortgage payments.
Yes.
The next thing I think is that if people are going to consider it, you really need to consider the cons. And I'll tell you what the cons are. And the cons make it not suitable for a lot of people. So
the disadvantages to the 99% mortgages, what are they?
So if you're taking a 99% mortgage, you'll find that you're paying some of the highest interest rates. We spoke about the average being 5.6 or something. It's going to be higher than that. The next thing is that there's more chance of negative equity. So for those of you at home that may not know, negative equity is when the value of your home is lower than your mortgage balance, which means that in any case that you can't pay, if you sell, you can't just pay back the loan. And then the other disadvantage is that it will push house prices up. So that 300k house may not actually be 300k. It might be a lot more, because when you lower barriers to enter the property market, it fuels up competition and it pushes prices up effectively. I think that it's a little bit scary because you may have some people, and I'm not talking about renters here, I'm talking about people that may be living at home that have never really had any bills. You might just be paying a gym and a phone bill effectively. And all of a sudden, if you're earning enough, you can put down a 3%, a £3,000 deposit and get access to a home. And there's so many more responsibilities that come in that.
Tayo, just before we go, because we're short on time now, if people are looking right now to change their mortgage deal, should they fix, do you think, for 2 years, 5 years, 10 years? What would your advice be right now?
It's a tricky one. Put me on the spot there. That's a big question for
That's what I'm here for.
No pressure.
I think focus on your financial situation. I think that the base rate they're hoping will go to 4% by the end of the year. So a 2-year fix can give you that flexibility, and hopefully it looks like it's trending downwards over the long term. So yeah.
Okay, Tayo, thank you so much. Lots of great advice there. Thank you for your messages as well. Look, after break, we're going to move on to something a little bit different. We're asking if a good sex life is the secret to a long and happy marriage. President Joe Biden reckons so. So do you agree with him? Or do you and your partner have another secret to your happiness? Do let us know. 0207 862 2222 is the number that you need. We'll speak to you after the break.